Alright guys, welcome back to this global comedy. Now at this point, I'm just doing stand-up. So the move from the dollar is going global, and when it comes to de-dollarization, the conversation normally revolves around the BRICS. Now Russia selling oil and gas in rubles, that's one. China setting up alternative currency systems, that's another. And the global south dumping US treasuries for gold, that's the third. Now all these are important, but major US partners are moving away from the dollar as well. And this is a nightmare for President Trump. Australia, which is a huge commodity giant, is starting to de-dollarize. Big companies, they are riding the winds of change and they are jumping ship. Now, Beijing is helping the Australians accelerate the process. Iron ore demand in China is out of this world. They buy over 100 million tons of the commodity every single month. China knows the incredible amount of leverage they have. This demand is 75% of global iron ore imports. China essentially sets the price. If they buy less, prices collapse. If they increase imports, prices will soar to the moon. Countries like Brazil and Australia, they're extremely dependent on Chinese trade and imports. If you're a big enough superpower and you're the largest customer in a market, guess what? You can dictate terms. Just like how the US is forcing countries to dance around to lower the tariffs, China is playing their own hand right now. This is a perfect moment to push their de-dollarization agenda against the USD system. Now, this is a landmark deal. China is pushing for RMB settlements in the iron ore industry with Australia. This is an incredibly big and dynamic market, and this is a test drive for Beijing as well. For China, it makes total sense. If you can secure iron ore supplies in your own currency, you essentially win. There's no currency risk, and you require fewer dollar reserves, and you internationalize your currency all at the same time. The terms of the deal with BHP Billiton is incredible, and it sets the stage for every other commodity China is bringing in, including copper and energy like LNG. BHP, which is Australia's largest company, will be settling 30% of their iron ore sales to China in the Chinese RMB. This is a $10 billion deal that will cover nearly 90 million tons of iron ore. Instead of 10 billion in dollars flowing from China to Australia, it will be the Chinese local currency instead. And what will BHP probably do with the currency? Chances are they will recycle it back to China by doing more business there. This is a double whammy for the US economy. There's less incentive for Australia and countries globally to hold USD reserves if the usage of the currency slows. In addition, China's drumming up more demand for Chinese imports. They are giving countries their own brand of casino chips, and this is the power of leverage. Now, we can expect this deal to widen during the trade war. As the US starts importing less and countries rely more on China, Chinese demand will simply soar. Australia will have to concede more ground and de-dollarize their trade with Beijing. 30% of China-Brazil iron ore trade is done in RMB, and Australia will have to follow. Both countries, Brazil and Australia, they will de-dollarize even more. Now, the Australian de-dollarization goes even deeper. Australia's Fortescue recently secured an RMB financing loan worth $2 billion. And this is one of the world's biggest iron ore miners as well. So there is a strategy behind them borrowing the Chinese currency. The terms of the loan are extremely generous. You quickly understand why both the company and China they were eager to get this done. The tradition of companies and countries issuing dollar loans is now getting overturned. And this all has to do with three problems in the US compounded over the decades. The dollar is no longer a stable currency. US borrowing costs are out of whack, and Trump's economy no longer has an industrial base. Now, the terms of the loan are incredible. Firstly, it is unsecured debt. Chinese banks like ICBC and Bank of China underwriting the deal, they are comfortable enough taking on the risk. Investors, they are making it easy on Australia. There are also no limitations on how the money can be used. It's up to the company. Secondly, the interest rate is fixed at just 3.8% per annum. This is an incredibly low rate for any corporation in the world borrowing $2 billion worth of capital. If Fortescue were to borrow dollars in the open market, their cost of borrowing will be pegged to the US Treasury rate. Now, the 5-year Treasury in August was at 4%. So, if Australian companies borrow in dollars, they would have to pay easily 5 to 6% at minimum in interest costs, probably much more. So, you can understand why countries and companies are ditching dollar loans. The expense is just too high. Now, this loan is meant for the company's green energy plans. The US lacks an industrial base, and Trump, as we all know, is anti renewable energy. He still believes in big oil and gas. So, Fortescue is making a pivot to China instead. That's where they are going to use the borrowed RMB currency anyway. Beijing is vendor financing Australia to shore up their own Chinese industry. Even before the RMB loan, Fortescue awarded Chinese supplier XCMG with a $400 million contract. Now, the plan is to buy zero emission machinery and equipment from China. It's cheaper, it's efficient, and probably the only avenue to get it in scale. With the 14 billion RMB loan secured, we can expect more Chinese suppliers to benefit from this. The situation is a nightmare for the US. The dollar, the treasury market, and US industrial base is under growing pressure. And it can all be summed up in this picture. The closer China gets with Australia, the stronger the trend of de-dollarization. And that's why Besson is in panic mode. Just look at his face. He's looking really concerned about that handshake with President Xi. Now, in Asia Pacific, China is also making big moves to wake up traditional US allies, and chief of which are the Koreans. Now, we all remember how Seoul bamboozled Trump with a golden crown. It was a replica, and some of you guys said it looked like it came from Burger King. And yes, that was really funny. I actually laughed out loud. But when it comes to China, Korea had a very strategic gift for Beijing. The Korean president gave China a gold strategy board made from price wood. And the symbolism here is important. It has nothing to do with vanity or appealing to someone's pride. It's about shared cultural heritage and acknowledging China is playing the grand game very well. Korea is performing the ultimate balancing act. They are pandering to Trump while building stronger relations with the Chinese. China's gift to the Koreans is also very telling and quite hilarious. It's a show of Chinese technology to Korea, which is a tech powerhouse in its own right. There's also the subtle jab against the Americans on this one.
这个是去年我们小米生产的旗舰手机，
小米，
这是给您和夫人。
通信保安怎么样？
这个通信保安怎么样啊？
非常好，
你看看有没有后门。
还有卫星电话。
Well, if you get the joke, then you get the joke. And this exchange shows you the undercurrents happening in Asia. Countries are acknowledging the rising power while still trying to appease the global hegemon. Now, it's not an easy balancing act, but it has to be done. Everyone has to do the song and dance. US tariffs on Korea might have dropped from 25% to 15%. However, who really knows what will happen next week? Trump might U-turn everything and Korean exports to US markets might very well collapse. There's simply no certainty anymore. US trade policy changes faster than the weather. The Korean economy is highly dependent on China today. Because of the tariff war, Korea's imports of Chinese goods have flown to the moon. The trade deficit with China is getting more severe. Meanwhile, Korean exports to Chinese markets have stagnated. And a big part is the collapse in Korean auto sales to China. Seoul needs to find a way to repair relations with Beijing because the new world is going to look very, very different. Now, a big part of Korean exports is semiconductors and chips. We all know that, right? A lot of chips comes from Samsung and SK Hynix. But we know it's just a matter of time before China closes the gap throughout the value chain. The gap between Chinese and US AI chips will eventually close. And the same thing for memory chips, which the Koreans currently dominate. Better to make friends today before the tsunami rises tomorrow. But let's talk about BRICS and the Russian oil situation. Now, over the last week, Trump sanctioned Russia's biggest oil producers. If countries deal with Rosneft and Lukoil, the US could punish them. However, during the Trump-Xi meeting, nothing was mentioned about China stopping Russian oil purchases. As we predicted, the US has no leverage to force China to dump Russian crude. And now we have India confirming that Russian oil will still flow to their refiners. The Indian Oil Corporation will not completely avoid Russian crude. It's simply not possible, especially during a trade war. Russian crude today is already trading at an $8 to $12 discount versus Brent, and thanks to the sanctions, prices have gone up globally by over 10% as well. So every country on planet Earth is feeling the energy squeeze, including India. Now, since 2023, Russia has been India's biggest supplier of crude oil. It's over 30%. Cheap Russian oil has been subsidizing the Indian economy and industries for years. Imagine what will happen if they listen to the Americans and give it up. China will happily take up all the excess supply or the volumes at an even cheaper price. India will have to replace the volume with more expensive crude, maybe even American energy. Inflation will be higher and downstream inputs will cost more. Eventually, Indian exports will become less competitive. They would become more dependent on US markets, and Trump would have even more leverage over the country. And that's how insidious the chain of events can evolve from adhering to sanctions, especially if you have a big enough industrial base, which India has. Now, a few videos ago, we talked about how countries will simply play whack-a-mole with Trump. BRICS is not going to let go of cheap oil and abandon Russia because it could be Putin today, but it could be damned tomorrow. Well, it seems that the games have begun. According to Reuters, sources say that Indian refiners are still buying Russian oil for December arrival. 5 cargoes were bought from non-sanctioned entities. This is so predictable. It's the same playbook during the Biden sanctions on Russian oil. Putin can keep conjuring new companies or entities to sell oil exports to the world. And there will be independent traders and shadow fleets all ready to make it happen as well. The margins will be huge and you cannot stop the trade. China and Russia, they also have their own vessels to transport the crude oil globally. You cannot sanction away an oil export giant like Russia without repercussions. There will always be backdoors because of arbitrage. As long as there's a way for traders to make money, they will close the gap eventually. It's bound to happen 100%. Now, why is the US so desperate to punish Russia? Now, Trump says it is to end the Ukraine war. And let's play along and say, yep, that may be one of the reasons. But perhaps the real agenda is to peddle expensive US oil to the world. Now, in August, US oil production climbed to a fresh record of 13.8 million barrels a day. That's 300k barrels higher than the estimates. Even though prices decline, US production is still rising. This is a problem if US producers can't sell their barrels to the world. There will be a glut of oil stuck in the US. Now, storing them will cost money, and with China walking away, the losses are going to pile up. That's why scaring the world away from Russian crude is one strategy to drum up demand for US energy. If you handicap your competitor, you are the only market left, right? It is what it is. But BRICS is not buying what Trump is trying to sell. They will still import Russian oil, and that is not gonna stop. But let me know what you think. Will Australia and other commodity countries de-dollarize even further? Have the oil sanctions already failed? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.